Hello students, welcome to the doubt solving session of Accountancy ISC class 12th. We have discussed chapter number 1 in detail in our previous 10 lectures. In this lecture, I am going to deal with the doubts asked by the students during those lectures. So here they are. I hope all the students are ready with their pen and copy. Here are the topics. First one is loan given by the partner. See students, there are two liabilities. One is internal liability and other is external liability, which is also termed as debt. Now partner can introduce money in the business in the form of capital, that is internal liability, and in the form of loan, that is external liability. So external liability carries interest, that means loan carries interest which is to be paid to the partner. Interest is given because as loan is taken from the partner, loan can be taken from the third person, and that third person or the bank will charge interest. So we provide interest on the loan provided by the partner. I hope this point is clear to you. Now, in the absence of any information regarding interest on loan given by partner, we have to charge interest at a rate of 6%, whether it is given in the question or not. Is this point clear to you? Okay. Now, what will be the journal entry for the loan given by the partner? See, firm will get the money, so the entry will be cash account debit or bank account debit to partner's loan account. Partner's loan account will be credited. Is this point clear? And when interest on partner's loan is provided, it's an expense from the point of view of the firm. So it will be interest on partner's loan account debit to partner's loan account. Remember student, it will be credited in partner's loan account, not in partner's capital account. Is this clear? And when we will dispose this interest, it will be transferred in the profit and loss account. And what will be the entry? Profit and loss account debit to interest on partner's loan account. I hope this entry is clear to you. Now we are moving on to the third point, that is rent of business premises given to the partner. See, sometimes the partner lends his own house or his own building to the partnership firm. Now if you will hire any other's building, you have to pay the rent. Similar way, if partner is giving his own asset, so rent is to be given to that partner, and that is known as rent of business premises given to the partner. So what will be the journal entry? Again, it's a expense from the point of view of the partnership firm, so it will be debited. So rent on business premises account will be debited and partner's capital account will be credited. And where it will be transferred? It will be also transferred in profit and loss account. So what will be the transfer entry? P&L account debit to rent of business premises account. I hope these two entries are clear. Now partnership deed. See, partnership deed is a written agreement between two or more partners, and there will be detail of what will be the profit sharing ratio, what will be the interest on capital, what will be the interest on drawings, where is the principal place of business. All the details related to partners are mentioned in partnership deed, which you have already studied in detail in class 11th commerce chapter number 6. So here in accountancy, that deed is same, but in the absence of any given information, there will not be any interest on drawings, no interest on partner's capital, and the profit sharing ratio will be equal, that is 1:1 if they are two partners, and interest on loan will be given at a rate 6%. Is this point clear? Only interest on loan is given. Even the interest on loan taken is not mentioned in the partnership deed, so we will not charge in the absence of any information, but will give interest on partner's loan at a rate 6%. Is this point clear to you? Okay. Now, what is fixed and fluctuating capital? Few students were having doubts in this topic. See students, when we are making two accounts, then it is fixed capital, and when we are making single account, then it is fluctuating capital. When we will merge both the accounts of fixed capital, it becomes fluctuating. Is this point clear to you? So every day-to-day transactions is treated in current account, whereas in fluctuating capital account, entire transactions related to the partners is treated. Is this point clear to you? Now, appropriation and charge against profit. See, charge against profit means we have to pay the expense even if there is loss. Is this clear? So any interest on external debt is a charge against profit, whereas interest to be paid to the partner's capital is a appropriation of profit. That means if there will be sufficient amount of profit, then only we are going to pay them the interest, otherwise we will not pay them interest. Is this point clear? But if we have to pay interest on loan, it will be debited in profit and loss account. That means even if we don't have profit, sufficient profit, then also we have to provide the interest on loan. Is this clear? Now, debit balance of capital account and debit balance of current account. See, when the capital is overdrawn, for an example, you have invested capital of rupees 1 lakh in the business, and after 2-3 years you have withdrawn more than 1 lakh out of capital, so it is termed as capital overdrawn, and that is the debit balance of partner's capital, and it will be shown in the debit side of the partner's capital account as balance brought down, and in balance sheet it will be shown on the asset side. That is known as debit balance of capital. Same way, debit balance of current account, again when in day-to-day transactions the capital, the amount withdrawn by the partner exceeds its credit balance, so it's the debit balance of current account. It will be also shown in the asset side of balance sheet. Now, when interest is provided on capital, so on the credit balance interest will be given, but not on the debit balance. But when interest is charged on current account, if it is credit balance, then it is to be given, but if it is debit balance, then also we have to take the interest from the partner, and it will be shown in the debit balance of current account, and if interest is charged, it will be shown in the credit side of profit and loss account. Is this point clear? And if credit balance is there, then the interest will be shown on the debit side of profit and loss appropriation account. Okay, so these were the doubts asked by the students, and I have explained those doubts. Still, if you are having problems, then you can go through the illustrations for better understanding. And few of the students were asking me the question. See, if you are not getting the answer of one or two question, it's okay, but if you are not getting the concept, then you ask me the concept, because it will be difficult to solve the questions of each and every student, because one is having doubt in one question and other is having doubt in other question, that the answer is not coming. See, if you are clear in concept, then it's okay, but if you are asking doubts related to your personal answers, then it will be quite difficult to solve. So you try to adjust for a while, then I'll try to find some technical ways to give you the solution of each and every questions. Okay students, I hope this session was quite beneficial for you. We'll meet again in the next lecture. Till then, all the best, take care, bye bye.